Good afternoon, everyone. I'm Tim Richards, Technical Services Manager of the Managing General Agents Association, and on behalf of the MGAA, I'd like to welcome you to our briefing this afternoon. This is being delivered by CGI on the subject of underwriting efficiency and the adoption of digital services. Before I introduce our presenters, I'd just like to run through a few housekeeping points. Please ensure your microphone and camera are turned off. If you'd like to ask a question, feel free to use the chat button at the bottom of your screen. Time allowing, these questions will be asked and answered at the end of the event. If we run out of time, questions will be answered after the event. There are some poll questions included, just to reassure you that these are anonymous. This presentation is accredited for CPD hours if relevant to your ongoing professional development programme. The briefing is being recorded, and a link to the recording will be issued post-event together with the slides and our feedback survey. Please take the time to complete our survey. It will take no longer than 2 minutes and enables us to deliver the best possible future events to our members. So as a recap, today's briefing is on the subject of underwriting efficiency and the adoption of digital services from CGI. Let me introduce you to our presenters, Tim Scott-Simmons and Kat Holman. As CTO of CGI's insurance consulting team, Tim drives the development of CGI's technology strategy, product development, and its architectural and engineering services in the UK. Tim has 20 years of experience in the insurance industry, leading complex transformation programs and delivering innovation for clients across the UK and in Europe. And having worked as an underwriter, Kat chose to apply her knowledge and 10 years experience with the insurance market to dedicated solutions and services focused on underwriting and pricing. Kat is passionate about digital insurance and working with underwriters to help develop market-leading strategies in the areas of pricing, risk selection, and operational efficiencies. So without further ado, enjoy the briefing, everyone. And Tim, over to you.
Brilliant. Thank you very much, Tim. Thank you for the introduction. And thank you, everybody, for your time today to listen to us while we share some of the knowledge that we have within this area. So for today's agenda, I just wanted to start off by outlining the learning objectives we hope that at the end of today's session you will have gone away with. We're going to do a quick poll at the start just to get a sense of where the audience is at in terms of their understanding on this particular topic. And then we're going to dive into the topic in question and try and address those 3 learning objectives. So first, we're going to hear from Kat around how to recognize the challenges within underwriting efficiencies. Then I'm going to talk about how to select the right type of digital services to address and help resolve those types of challenges. And then finally, we're going to talk about some of the lessons learned through the experience of CGI and both Kat and my own careers around how to successfully roll out digital services and adopt them into the way that you run your business. But just before we kick off, I'm conscious that not many people may be aware of who CGI are. So I just wanted to set the scene. CGI is one of the world's largest solution integrator and consulting firms. We work across many different industries, but what makes CGI unique is that the people who work within our industry, we are dedicated to the particular sector. So as a result, people like myself and Kat, we've joined CGI because of the knowledge and expertise that we've had through our own careers in the world of insurance. So as a technology firm, we have people who really understand the industry that we're working within. That gives us a good degree of expertise. It ensures that our finger is on the pulse when it comes to change that is happening within our industry. But today is not about a sales pitch. We really want to focus on learning and provide to you the best possible outcome for the next 45 to 50 minutes. So without further ado, let's get into the topic of how to deliver underwriting efficiency and select and drive the adoption of digital services. So as I said at the start, our learning objectives are quite simply the 3 points. How do you outline and recognize the challenges of underwriting operations? What are the unique challenges that exist within underwriting ops? Kat's going to bring that to life for us. She's going to give us a few examples and best practice advice. All of this is, this advice and the learning objectives today is based on how we've delivered things in the past, and hopefully that you'll find that insightful and how to apply that to your own business. The second is around how to identify and select digital services That's based on my own experience of having worked in 20 plus years delivering technology and change into the insurance industry. And then finally, Kat and I will both cover off the third learning objective of how to successfully adopt those digital services. And spoiler alert, it's not just about selecting the technology, it's also it's about ensuring that you bring the people with you along that change journey. So those are our three objectives. So let's do a quick poll to understand where people are today in terms of their understanding of this topic. So Tim, can I just ask you to bring up the poll, please? Thank you. I'll just give the audience...
Sorry, I beg your pardon. I think that's the wrong poll. Let me just change that over. That's the second poll. Apologies for that. So let me just relaunch that poll now. Okay, that should be appearing on your screen now.
Okay, hopefully people can see the poll. As Tim said at the start, it is anonymous. The reason we're asking a poll today is we just want to get a sense of where the audience is at. So I'll give people 30 to 60 seconds. I can see the results if they're starting to flow in. And there are 3 questions on the poll, so you may need to scroll down on the screen in the pop-up box from Zoom. Okay, we're at 70% of you have responded to the poll. Thank you for those who have. I just thought I'd do a quick recap in terms of the answers that we've gone back. So the first question, how do you perceive the impact of today's operational processes, the result of technology impact on your underwriting processes? We've got positive, overwhelmingly positive in terms of the poll results for that question. 5% of you said extremely positive, 68% of you said positive. We've got a few negative and neutral, but overall a positive response. And I'm not surprised at that result, that particular response. But it's good to understand that that's the outlook in terms of the adoption of digital services to the underwriting operations. People are looking positively on how that can actually apply and make a difference to the way that you operate your business. The second one, how familiar are you with digital underwriting services? So let's have a look at this. A bit more of an even balance across the distribution. Less than a third say very familiar, over half say somewhat familiar, and then another less than a third not familiar at all. So that the final third, hopefully today at the end of the session, we would have given some food for thought. We've moved you from the not familiar at all to the somewhat familiar category. And for the people in the middle, hopefully we'll get you much closer to that very familiar. But it's good to know we've got a few experts on the call listening in to what we have to say today. And then the third one, have you personally used digital underwriting services within your work? This is much more interesting. So we're saying 40% yes frequently. The next 30% are yes occasionally, and then the final third is no. Okay, so again, let's see how today's session, hopefully we address those learning points for you and you can take that away. Good. Tim, can I ask you to close that poll? And we will kick off in terms of our first learning objective.
Right, that's closed now, Tim.
Thank you. Okay, Kat, so we wanted to start off with how do we recognize the challenges within the underwriting processes? So Kat, do you want to start by sharing some of your knowledge within the space?
Yeah, thank you very much. So one of the things that we do whenever we start looking at any form of efficiencies or operational changes is really mapping out what the challenge is and what we think the challenge is. So that can be really varied depending on the organization. In particular, if we think about digital underwriting and compare it to manual underwriting, where an organization is in that process. But the first thing I want to kind of talk about is process challenges. I think that all insurance organizations will follow a process for some of their underwriting, and they tend to form kind of the same foundation. So a risk comes in, we review the risk, we either write it or we don't write it. So the actual foundation process is quite simple. However, when we look at individual businesses, you'll see that that process can go quite a lot of different ways, and there's loops and offshoots that then come back in again. So mapping out that process is usually one of the first things that we kind of look to do, mainly to firstly understand what an organization is looking at, but also to go through and highlight where the actual pinch points are. There might be a task which happens very rarely, it's quite low volume, in which case that's not really, it's a challenge, but it's not a high priority challenge. So what we like to do, map out the underwriting process and look at those high volume tasks. For example, if you have a property owner's book and your flood checker isn't built into your system, so you have to go and access a access database or an Excel database, type in the postcode for every single case, every single property, and then type it back into another system to then go and do your underwriting to get your pricing in another Excel sheet. They're the kind of tasks and the kind of process points then can come out quite quickly and tend to lend themselves both to the objective of a business, which is to reduce the operational strain, whilst also making sure that it fits with what the process is. So that's our first thing that we do. We tend to look at it in similar to the kind of image at the bottom left-hand side, which is taking that process and breaking it into its respective parts. So what are the steps you have to do? So in particular for MGAs, there you have lots of different insurance organizations and capacities that you'll be dealing with, and some of them will have different requirements to others. Some products or some classes, in particular around the niche areas, will have things you need to do. And what we try and look at doing is, okay, what of those processes need to stay? Because a lot of them will. What of them are things that maybe have always been done that way that can kind of been challenged, or, the technology may be different now to how it was when you first started writing it? And then what are processes that are really localized to that specific team? And that's kind of point two. So if we think of underwriting as a process, like I said at the beginning, it is reasonably a straightforward process. A risk comes in, it's either really good and you really want to write it, you might kind of want to write it with, a lot of terms put into it, or you really don't want to write it. Once you've kind of done that process, really what you want to say is, okay, why does this product have this issue? So if our challenge is, for example, the flood checker, is that just this team? Are all the teams using the same flood checker? Is there one team that does it a different way? Is there one capacity that does it a different way? Are they really localized? So for example, a motor book won't have that flood issue. So what are they doing? Do they have a theft database, which is really similar? So we try and look at organizations both really locally to see kind of what specific teams are doing, but also as a whole, because sometimes when you are thinking about adopting digital services, there may be one solution that then can meet multiple teams. So you can kind of look at it on the big picture and the small picture at the same time. And then the last thing that I've kind of put there is around pulling data. I think sometimes when you map out processes, people remember the things that are difficult or things that cause them problems. And sometimes they become much higher in your priority. But when you pull the numbers that sit behind them, you start to realize that actually they might not be your priority problem for your current operational challenge. They are a challenge, but are they your number one challenge that you've got? So once we kind of pull out these, the process maps and put them together, what we tend to do is go and look at the data that sits behind them. So if we look at that one at the bottom of the screen, how many applications are coming through? How many times have we asked for more information? How many times do we have broker emails coming backwards and forwards? How do those broker emails go backwards and forwards? Is there someone whose job it is to color code them when they come back in and drag them to someone's mailbox? So what are each part of the challenges on these, and what are the numbers that sit behind them? So that when we go to the next stage and start looking at how that challenge is going to go forward and link to objectives for what we actually want to achieve, then we can start putting a prioritization order. That's important, firstly, because, no one's got the time or money usually to do everything all at once, but it also means you can do things iteratively and you can really build the kind of business case that sits around it. And that's what I've put on the right-hand side. So when we talk about data, there are a few challenges there. One of them is that data can be hard to source quickly. In particular, when you're doing a lot of manual underwriting or kind of just going into digital trading, or even if you've been doing it for years, you will have products that are legacy, that move around, that change name, that change broker, that change capacity. And it's sometimes quite hard to pull all that data together in order to be able to make real decisions that come from it. I've also put there about data can be quite subjective. Can be how you cut it. So data should be all qualitative. It should be, this is the numbers and this is how they look, but it really depends on the context of the bigger picture. So if you looked at a complex ELPL, so complex kind of contractor's book, for example, and looked at the numbers there, that would seem, a problem in there could seem like a really big problem. But when you look at it across a massive book and add things like your property owner's book, which has way more transactions coming in maybe, then the numbers can be changed to see how they fit to meet with what the objectives are. The last one I put there is validation. So it's very easy sometimes to put these kind of process maps together, but it's really important to go and validate them with real users to understand any workarounds. Because when you map out a process, like I said, it's really simple. But when you talk to the people doing the process, there will be workarounds that have been built in. The people you employ are usually really good. They want to get their job done and they want to do it the best they can. And there are times where they have to do things in a slightly different way that might deviate. And it's important to know those workarounds, especially if you're moving to go to a new solution, because what you don't want to do is build a new solution and get really far in that journey and then realize there's a workaround that wasn't really known about or wasn't really mapped out that's been missed as you go through, because firstly, it's going to change your requirements. It will make it take longer. And also it will kind of just damage that kind of first input of kind of bringing it into your business. And the other one is when you get real users in there, they understand what the actual impact of, saving time in different areas is, or why they do things or how they do things. And it really helps by validating that data as well, because if you're pulling numbers and they look, sometimes it's hard to know if the data is right or not without asking people. But once you start pulling them and looking at it a little bit and talking to people about it, it does make it a lot easier to kind of validate that findings. And you can start pulling your business case requirements. So from that really early point, you can come out of this system and you can say, right, I know what my process is. I know what my challenges are around my process. I know the numbers that sit there. So also it means that when you start looking at what that solution is going to look like, you can build your business case early to say, okay, if we can solve this problem and this problem, this is what the impact is to our business. So it makes it easier to start at the beginning of that process, because it might be that you pull the numbers, you look at the process, and it doesn't have the value in it that you thought it might do at the beginning. And it saves a lot of time really early on.
I think that's a really important piece of advice that you've given there, Kat, around, encouraging people to validate early, particularly when it comes to process maps. I see that all the time where you think you've got a good understanding of the requirements, and then it's not until a project is in mid-flight of delivery that as people are building things, that suddenly they realize that there were gaps in the requirements, things missed within those process maps. So ensuring you've got good, accurate process maps, that you've actually sat down with people and stepped through and confirmed that it does represent what happens in reality is an extremely important takeaway for the people on this call. The other thing I would also say that's really useful with process maps, and this links back to a really common challenge we hear when we're talking to insurers, which is the rekeying of information. Right, I hear that all the time, where we're looking for a new solution to having to avoid all the rekeying of information. If you take your process map and you color code those boxes over, well, what system does this step actually happen in? And you include all the tools that people use, not just your policy admin system, not just your exposure management system, not just your check. But if there's a little step that somebody then copies something and puts it into Excel, you make sure you capture that as well, because it's those other workarounds that Kat was talking about that really do help to, if you can identify them, you can start recognizing where the challenges are with the overall process that's introducing those inefficiencies. Okay. Shall we go on to the next slide, Kat?
Yeah. Okay, so the next thing that we're going to talk about is, once you've recognized what that challenge is and where it sits in your organization and the priority of it, is kind of how you set, track, and then adjust your objectives as they go forward. So you found out what your challenge is, and there's lots of different ways to map this out. Some of it can be, if they're very small, you might just want to just talk about it and say, this is a very specific problem. It does this, and we want it to do this, and we want to do it by Q4. That is quite straightforward. However, what I want to talk about is the OKR process. We use this quite a lot at CGI. So OKR is objective and then key results. So the little diagram at the bottom kind of really goes into it in quite a bit of detail, but essentially your objective is your qualitative statement. So what do you want to improve? So for example, I want to reduce property owners referrals by 50%. That's what I want to do. We know it's a problem. We've pulled the data. Our staff are telling us it's a problem. The numbers are saying it's a problem. As an organization, we don't really want that problem. So that's what we want to improve. And then the key results part of it is, what are your quantitative measurable outcomes? So if we say we want to reduce property owners, okay, do we want to reduce all property owners? Do we want to do it all at once? How are we going to do it? And these are very quantitative. They are, we are going to put this change in and it's going to do this. We're going to put this change in and it's going to do this. And they kind of have quite time measured stamps, and they all link to that core objective. The advantage of it is sometimes those quantitative statements don't have to be that specific. It could be that we also want to improve staff morale. That's what we want to do. Our challenge is that we found that the staff who are doing these quotes, it's taken loads of time and they really hate it and they've got loads of problems. And that's what we want to do. That's our qualitative statement, improve staff morale. Okay, how are we going to do it? And those key results can be quite long. They can be quite short. We tend to look at ours on kind of a monthly or a quarterly basis, depending on what it is. And they can be really, really stretch goals. It could be, we want to digitize this product. That's our objective. And it might be that that's a long-term goal. It might take a while to do, but the key results mean that we can go, okay, this is the result of doing what we've done, and this is the result of doing what we've done. And the objective might change as you go through. Regulation might change, capacity might change, the book might change, but the key results, they always say that they will always be something that you've achieved. So even if the full objective isn't met, you can say, John, we've achieved these key results, and that's what we want to do. And when you're adopting a digital solution or any form of solution that goes around it, software or just a process change, it really means that you can say, okay, did this work and did it do what we think it was going to do really quickly? And if it's not doing it, why didn't it do it? And because it's the quantitative and qualitative, you can look those together when you kind of map them out. My main point around this is that sometimes you won't meet these objectives. They might be stretch goals. If you want to digitize a product, you might say, do you know what, we got it onto a system and that was great, but we've got loads of these things we didn't do. So yes, it's digitized, but we're still having to look at a lot of referrals. That's okay. You've achieved some of the objective. The most important part of it is being able to look back and say, this is what we wanted to do. This is how much of it we did. And when we look at our key results, we tend to monitor them in kind of like a red, amber, green kind of system. So this objective had 10 key results and we achieved 7 of them. And that's great. And the last 3 we didn't. And then we review them and say, okay, do we still want those? Are they still relevant? Did we not achieve them because actually when we started doing the other 7, we've realized that these aren't as important to us? Or did we have to do these 7 first and it's just a time framing kind of thing? And that's why I've put there on the right-hand side, just things to think about when you're adopting kind of OKRs in general. And you can Google it. There's quite a lot of stuff around this when you start like looking into it. But sometimes there'll be external factors that you have no control over. So we wanted to build this product, but actually our capacity pulled in month 3 of it. There's nothing you can do about that. You might pivot and say, some of that stuff we put together, we use that for a new capacity or a new product. And then you change your objective and you change your key results to sit underneath it. But you can track them as you go through. Stretch goals are really tough to meet, and they can be demoralizing sometimes when you see that they stay maybe in that red or that not achieved or not progressed. But sometimes that's kind of the point. The objective's meant to be tricky. It's, insurance is hard. Writing a book is hard. And that's why it's important not just to look at the objective, but to really focus on the key results that sit underneath them. Now, if you have an objective and key results and none of them are getting pushed forward, then there's a question to ask. Is it still needed in your business? Because if you've put this as your key, this is my objective, my key result that I want to achieve, and this is the challenge and this is why we're doing it, and it's not moving forward at all, do you still want to do it? And that might be no. It might be that things have changed. We don't need to do that as an organization. Or actually the problem that we had has been solved in a different way. And that's fine. That's absolutely fine. The most important thing is to have it consistent and mapped out so you can track it and review it. You're not stuck to one thing that is, left and you only look at it once a quarter. It should be things that are looked at progressively throughout the quarter. So we tend to allocate different actions. So one objective, I might have some actions, Tim might have some actions, Darren might have some actions as well. And then we monitor our own ones, but it comes together as a whole. The good thing about that as well is it stops the objectives and your challenges being siloed to one person, that they're one person's responsibility to do, which can stop bottlenecks, because sometimes you'll have one person who is in charge of everything, and that happens. And if it is what it is, but sometimes it means you can split it out a little bit by giving different people some of the results that sit underneath it.
So the reason we included this particular point within this presentation is if you've got a clear outcome in mind, it actually makes it a lot easier to recognize the challenges and execute against the outcome that you're trying to deliver. And we've found that the one key result approach is a great way of actually managing that. So I'm just conscious of time, Kat. So let's jump on over to the next slide.
Okay, so the last one is feedback. So this can be both data and people's feedback that comes back in. We're going to focus more on the people side of this one. So first thing is creating an open and safe environment. So I think when we're getting feedback from people, in particular in insurance organizations, it's giving people the confidence to say what is working for them and what is not working for them, and doing it on a consistent basis. So I've worked with some organizations who do this really well and bring everyone in the room and say, tell us what's working, tell us what's not working, and we'll get everyone in and we'll do it as a town hall and we'll report back to you and tell you what you've told us and what we're going to do about it, and more importantly, when we're going to do it. And you can ask us difficult questions and we will answer them to the best of our ability. And if we can't answer them, we'll tell you why we can't answer them. I'll tell you what we're going to do to find out how to answer them. And that's really about that, getting the right people in the room, is having everyone who's involved in that process. Now, that doesn't mean that everyone is there at every step, because too many cooks, it's not always the best way at the beginning. But when you start putting these in and start saying, this is what we're going to do, it's having the right people in the room at the right time. Firstly, like I've put on the right, I think it helps with morale and people being involved in decisions that impact their day-to-day. But also, it means that if you get negative feedback, it's still a positive thing. It means that you might find new challenges in your new processes. You might find that things that had been missed in the requirements. And if you keep doing it consistently, it means you don't just get this right at the end where you go, here's the new software, here's the new, the new solution we're going to do. And people go, well, I don't like that bit at all. And then you go, oh, that's not exactly, you didn't say that 3 months ago. And that's why it's important to do it, encourage it, and keep it going on a consistent basis. The only thing I have put there is that the thing with feedback that's not kind of data-led is it can be subjective, and it does rely on interpretation and personal experience. So people don't always love change. That's a fact. It's tricky. It can be hard. People are in their processes. So we have to recognize that the feedback you get might actually not be about the challenge. It might be about how people are feeling about the challenge. And then obviously you have to kind of adjust your response to that correctly.
Lovely. And again, back to that, people don't always naturally want to embrace change. When you're looking at adopting a new digital service, you're looking at improving the way that you underwrite. That, by some byproduct, involves change. Okay. So for the next learning objective, we wanted to look at how you identify the right type of digital services. And I've got some good news for the audience. We are absolutely spoiled as an industry now in terms of the different digital services that are out there. There has been a complete explosion across different services targeting the insurance industry, making data available to the insurance industry. I have a really significant database of different providers and InsurTech providers that we work with at CGI. And I just sat down, I took the overall database, which goes into hundreds of providers, and I put it into a word cloud, and this is what it spat out at me. And to me, it just brought home just the sheer breadth of different types of digital service providers out there, right? Some of these are very small firms. Some of these are very large, robust platforms that are essential to the way that the insurance market operates. So when you're spoiled for choice, the natural temptation is to go off and find a couple of technology suppliers that have some cool stuff, right? I'm just going to pick one thing off the list here. Let's say fraud, right? Fraud detection. There is an abundance of fraud detection processes and service providers out there in that space. Or chatbots, right? Again, an abundance of chatbots and technology providers. Some that are tailored for the insurance industry, others that are just will work in any industry. Now, the temptation is to want to start working directly with those providers, to do proof of concepts, to go to the demos, see what's happening. And there is some, yes, you can learn some valuable insights from doing that. However, if you haven't got a clear understanding of the outcome in mind, and the challenge you're actually looking to address, so the first part of what Kat's talking about, makes it a very difficult thing not to get caught up with what the new service looks like and what it could be, and you kind of drift away from the original objective and outcome in mind. So in order to really help navigate through just the sheer number of different solution providers out there, one of the things that we've done at CGI is we look at the challenges around the wider insurance industry through what we call the Super six different lenses. And again, you'll notice on the screen here, we've got an outcome for each of those different areas. So what I want to do is just talk through what we consider the how do you actually ensure your processes are fit for the future by looking at each lens and bringing it back to that outcome that each lens is trying to solve. So let's start with the beyond legacy, right? So what do we mean by that? Often some of the challenges we hear is people have legacy technologies or systems that are actually holding them back, or it's costing them a lot of money to make changes, right? And that speeds down that has an impact on their speed in which they can make changes and respond to market conditions. Okay, so when we look at the beyond legacy point, it's well, how do we actually reduce the cost of change within the IT systems? That doesn't necessarily mean a rip and replace. That can be augmented with other technologies. There's a whole host of some fantastic AI tools out there that can be used alongside legacy technology to augment and to unblock some of the challenges that historically that they've used. Automation tools are out there as well. And it's really important to remember that every business does have some degree of technical debt, right? You're going to have systems in there. As soon as you bring in a system, then naturally the world is moving on. So when you're looking at that beyond legacy, how do you ensure that your systems aren't having an impact, an operational impact on the way that you work? So that's that first lens. The next one, and Kat talked a lot about this around identifying the challenges, is what we call fluid data. So how do we actually use the data that's flowing through your business to drive profitability, right? Particularly in the case of underwriting, how to think about the feedback loops that you're going to get the insights in terms of your referral rates, right? Or the factors that are driving certain downstream behaviors from a claims perspective, your segmentation of your portfolio, the understanding of the risks that you actually are writing, or on the converse, understanding the opportunities you're not winning. So again, fluid data is all through that lens of how do we actually ensure there's the right technology and operations to make better use of the data that is available to you as a business. Okay, and that can mean lots of different things depending on the challenge that you're looking to address. The third lens is what we call the insurance ecosystem. I said a couple of minutes ago, we're spoiled for choice from the number of different insurtech providers. There's a real robust network of different platforms, tools out there, and some of these actually talk to each other. So how do you ensure that you're building up the right ecosystem that combines together the right providers that helps build out a strategic advantage to you as a business, right? And when I look at the third-party providers, digital service providers, you can kind of categorize them into three main areas, right? I think that it's either strategic, core, or commodity. And let me just explain what I mean by that. So strategic this is a service that's absolutely integral to what makes your business unique, your approach to underwriting unique. It is your USP or part of your USP. Okay, so that's your strategic service. That's something you need to be very selective, very focused on, making sure that you've got the right control and agreements in place, because it's the core to why people choose your product and your business as to opposed to something else. And that doesn't necessarily need to be a technology offering. That could be a outsource of a business process, but it is, again, it is something that's strategic and unique to your business. And often actually those services you want to hold on to and keep in-house. Okay. Then you look at core. So cores are things that you just need to do this as part of running a business. Every insurance organization has to do this. I'll give you an example of that. Sanctions checking. If you're underwriting, before you underwrite, you need to do your sanctions check, right? It's something that we just have to do as part of the industries that we work within, with the regulation. So a sanctions checking service and a team who do that is a core service to your business. And the last one is what we call commodity. That's more of the traditional IT stuff. So your Office 365, and the ability to do your dashboarding or your finance general ledger system. Those are more commodity services. Every business needs some of that technology to run. So coming back to the ecosystem, when you're looking at the ecosystem, it's how do you join the services that you're using within the core, strategic, and commodity areas together and ensure that you've got that right flow of information and right joined up model to operate efficiently through that end-to-end process. Moving on to the lens of superhuman, and this is where at CGO we kind of categorize all the topic of AI. Now, if anybody thinks AI is one technology, it isn't. It's a collection of different technologies. There's a lot of hype at the moment with large language models. It's incredibly impressive what these tools can do. And people are exploring how can you then apply that and actually help streamline the way that digital underwriting works around the adoption of AI tools. And some good examples of that are the underwriter workbenches that are powered by AI. It's one of the things we've been working on at CGI and alive with. There are other platforms out there, but any sort of how do I take a manual process that requires somebody to inspect and extract data or rate risk, and there are other use cases around AI, the conversational AI for the chatbots dealing with customers, complaints management, back to the underwriting perspective, dealing with the incoming submissions, optimizing and triaging the submissions. There's use cases in that area as well. But again, the lens of superhuman is how can we augment what people are doing? This isn't about replacing, it's about augmenting. So I call it AI in the loop rather than a human in the loop. The idea is that if you look at your overall business process, you define how you want it to work, and then you go, at what points in that process would AI actually be beneficial? Okay, moving down, reimagine risk. Okay. This is where the outcome is, how do you get better outcomes around the way your understanding of risk, the flexibility and agility of pricing updates, and just dealing with risk management. Okay. So again, lots of service providers in this space, lots of different ways to combine information together, combine technology together to do some interesting outcomes. Of course, it's very line of business specific, depending on what type of risks you're actually underwriting. But again, reimagine risk is that, do we have a good understanding of our book? Do we know what the silent risks are within that book as well? And the last but not least, and particularly as soon as you start, well, actually, this applies to every business. Most businesses, all businesses are digital in some aspect, shape, or form. And when you're using digital services, you've got to be confident when it comes to cybersecurity. You've got to ensure that your business is protected. Okay, because your reputation it only takes one thing to go wrong in the online world, and you're dealing with a hack or a breach or something along those lines. So ensuring that you're implementing digital services and selecting the right type of provider who has the right controls downstream is an important part of being cyber confident. And in fact, I was talking to a chief information security officer 2 days ago, and we're talking about just the risks that most businesses have when it comes to cybersecurity. And 80% of that risk is not in that business. It's downstream. It's in their suppliers who are running systems for them, who are processing their data on that business's behalf. So again, when you think about cyber confident and selecting digital services, it's an extremely important part of the selection process to ensure that the people who you're selecting have the right controls in place, and then you've got an understanding and a wrap around that to manage it as well. So again, just conscious of time, so I'm going to move on. This is a little bit of a playback around what Kat's already talked us through. So back to the identification of digital services, assessing those operational needs, having a clear map of all the pain points and bottlenecks, and then be very clear on the outcome. So as Kat told us, we use the OKR approach to be clear on the outcomes at CGI. I encourage people to look at that processes. The way to actually help visualize some of the challenges, some of the tools that we've used internally we find quite effective, again, as value stream mapping, so to understand the end-to-end value that you're delivering to your customer. Another area and tools that people find is quite useful is what we call cause and effect diagrams, or they're also commonly known as fishbone diagrams. So it gives you a way to visually represent, well, this is the outcome, but what's actually the cause that's contributing to that. Again, these are some of the standard business analysis techniques that are used to help identify the challenges and then address and visualize what the future state could be where those challenges are resolved. Okay, and that's that next part of, once you've got an understanding of your current roadmap, your current technology estate, your current process map, then doing a future state. Where do you want to be? What does the optimum view look like? And how fully digital is your operations? Is it a end-to-end straight-through processing model that you're targeting? Or is it actually, this is about small points of optimization, but it's the people who are core to the service. And having that clear target state with a clear outcome of what you're trying to achieve there is extremely important. And the reason that's important because it will help you determine who is the correct type of digital services to achieve that outcome. So much of the processes that insurers run today are what I call digitized versions of the paper processes that were in place 30, 40 years ago and beyond, right? Even if you think about, the insurance contract, right? It is still a piece of paper that you are issuing. A policy is a piece of paper. So that digitalization of the insurance, the evolution of insurance, a lot of just what we do today is baked into the fact that it has come from an analog world, and we're still dealing with a lot of end-user computing, Excel, Microsoft Word, emails flowing around. So back to that future state, depends on what you're trying to do and the outcomes you're trying to have and the type of business you run, whether you're a B2B or a B2C, does have a big impact on selecting the digital services. So let's get a little bit more specific then. So you've now got a couple of potential solution providers in mind. Some of the things that I would say that are worth looking at that don't immediately jump to mind. Of course, you've got to check for things like the functionality is a good fit. Yeah. I would say look at the user experience. Think about the end user experience, the day-to-day experience that people are going to have for this. Is the service one that is a nice interface to use, particularly when that's a digital service that is going to bring potentially your customers into the loop if there's some sort of outreach and input from the customer to get their data into that service. The next bit of feedback I'd say is ensure there's good cultural alignment. A partnership-based approach between your organization, whoever you're working with, is incredibly important because it allows for that open dialogue, that feedback. Because ultimately you will find things that need to improve and change. So having an aligned culture where you're clear on who's doing what, how to cultivate that shared sense of responsibility, knowledge, and best practice. Particularly important when you're dealing with some of the smaller insurtechs, making sure that you're clear with them over what's core information to your business that you don't want them taking and sharing in other parts of their products or your competitors, right? So that cultural alignment and clear understanding is extremely important. And then, of course, the risk assessment. Large insurers have dedicated procurement functions. The smaller insurers, MGAs, you might be doing that yourself, right? You might not have a procurement expert, but considering the risks associated with the adoption of the services, considering the risk associated with the organization you're dealing with, not just from a cybersecurity perspective, but just the overall reputational reliability, consistency of service, those type of things. Again, these are areas that will help you select down and find the right type of digital service provider. Okay. So moving on, I thought I'd have bring us back to the topic of underwriting efficiency and optimization. I thought I'd take a slide out of, this is how we do it at CGI when we approach it. And Kat's already kind of covered off some of this. We start off with that high-level business case. And the business case is important because it describes the outcome, but it also gives that total cost. It also gives the value, the return on investment you're looking to do. Being able to quantify that is extremely important so you can measure success. Yeah. Then we go on to what problems do you solve now? Right? And what problems you solve next. I've never come across a project where we have all of the problems solved in the first tranche. It should be an iterative process. In fact, you want to go on an iterative process because you will learn along the way. So solve one thing that will have an impact, that will make aligns to the business case, then go on to the next thing. As Kat said, and we highlighted earlier, the day in the life to validate is so important. So we do that. We then follow a risk-based appetite approach, and then we prepare for a pilot, again, for that reinforcement loop to ensure that it's good learning being applied to how things will operate going forward. Now let's look at it from a technology concern. So my background is technology and change. I've been an enterprise architect, a solution architect, a data architect. I've been a software developer. And so when I talk about things like compatibility, scalability, and security, I'm thinking about it from a security lens, from a technology lens. And these are some of the things that people, if they haven't had a technology background, can sometimes forget about. So I just wanted to talk a little bit about why they're important and how to ensure that they're not forgotten about in the process of finding digital services and adopting them. So I'm going to start off with compatibility. And by that, I mean, how easy is it for this new system to integrate? All right. I talked about the common challenge we hear about swivel chair integration, double keying of data. If you're buying a solution that doesn't talk to your other solutions, well, then you're introducing a bottleneck in your process. So compatibility, being able to easily integrate. Do you have the technical ability to then call those APIs if it's an API integration? If it's a ecosystem type provider who's plugged into your core service. All right, so again, ensuring you've got a clear understanding of how it's going to be compatible with the rest of your IT estate, the rest of the systems that are used in that end-to-end underwriting process, an extremely important one. Next one is scalability. Can it scale to meet the demands? And by scale, I don't just mean how quick is the page to load, how fast is the service to run. Those are important, of course, but it's also how does it flex? How does it scale as you've got other requirements that come in, right? Security, obviously you need to protect your data, understand where the data is. You need to make sure there's good controls and measures in place to protect your business. So being cyber confident. Compliance, you need to make sure you're working with people who understand the regulation that your business is subject to, the laws and privacy standards, and can they actually demonstrate them, right? And then last but not least, because it's extremely important, do they have the right support models? Are they reliable? Can you call them up when you get stuck? Yeah, because things go wrong. So having the right support arrangements, service level agreements, backup, disaster recovery. There's been a big push recently from our regulators around business continuity. So if it's core service that you're looking to bring in here, what do you do if it goes wrong? Right? What do you do if that service is not available? Is the person you're working with actually got the right assistance and process and frameworks in place to deal with that? So those are some of the technical concerns around as you're looking to adopt and bring these services in. Often you're looking at new services as software as a service or a cloud-based model. So it takes away some of the traditional concerns around installing software, running projects and management, but it is a process of change. Whether you're subscribing to it and just simply putting your credit card, you still should be thinking about these type of things. So Gat, I'm going to hand back over to you. I think the next bit was the people side of that change.
Yeah, so like Tim said, when you're looking at the digital services from the technical point of view, it can be quite, quite structured, things like compatibility and scalability. People are trickier. So I think it depends on the organization that you're in. But what I wanted to pull out was just that once you've got one of these solutions and you love it and you've worked with the company and that's going really well and you've got your objectives and it's going to solve all your objectives, is how you get people to adopt it in your business. Because that actually is one of the hardest parts of this. It's easy to do the requirements and that side of it, but getting people to use it and enjoy it and, see that it can be tricky, but it's going to get better. That's the tough one. So I've put here just kind of 3 points. So one's around collaboration. So kind of working with your team early. And that goes back to what we're talking about, that feedback loop. And it's explaining not just why, like the why, not just the what. So it's not, here's the system and this is what you're going to do from now on. It's what is the reason we're doing this? This is the strategic reason we're doing it. This is the objective that we had. This is what it will do for you on a long-term basis. Then the challenges. So any new system, and that is any new change, any new digital trading system, any new Excel pricing sheet, whatever you're doing, there will be bumps. It's a fact. Things don't always go right first time. Hopefully, if you've got, done it well, you've done your requirements, it shouldn't be like terrible, but there will be challenges as you go through. So bringing people along, being open and keeping that kind of optimism up, which links to the last one, which is that focus. And it's going back to that original objective and your challenge statements and making sure that the change that you've put in actually is still doing those objectives. So sometimes when you go along any of these type of journeys and you go through it, you'll find that you end up pivoting as you go through, and it's just going back and going, okay, are we still on track for what we wanted to do? So when you go through and have these challenges, when you want to collaborate with your team, you can keep really focused as what it is and keep them at the center of your decision making. Like Tim said, this is probably an iterative system. It's probably not going to be a one-time change. So when you make this first change, that's quite easy because you've done a lot of the upfront work. When you do the second change, it's like that kind of difficult second album kind of thing. You need to go back and say, right, what do we want to do? Who are we now? What do we want to keep going forward and achieving? And then putting that at the center of the decision making going forward. And that way you can get the people and the technology hopefully working together and kind of making both better, as opposed to kind of clashing and making both worse.
Brilliant. Thanks, Kat. There's some really good advice there. Look, we're approaching the hour, actually. That's gone very quickly for me. So let's do a quick recap on the learning objectives. So hopefully, we've given you some good ideas of how to recognize the challenges within the underwriting operations. Hopefully, we've given you some good insights around, what you need to do to identify and select digital services associated to underwriting operations. This was quite a big topic, right? So when we sat down to prepare for it, without understanding the exact nature of, the line of the business or the type of risk that people are underwriting, it's difficult to give general advice. So that's why we tried to structure in such a way that there's something there for everyone and that will help you on that process and journey. And then finally, hopefully, as we were talking about, just, don't forget there are challenges in adopting those digital services, right? So with that, I'm going to jump over to our final poll before we wrap up and just get a little bit of real-time feedback, kind of in the spirit of some of the things that we've been talking about. Tim, can I ask you to put the questions back on the screen, please? Thank you. So the first question is, how informative did you find the presentation? Please be honest. It's all right. We can take your honesty. The next one is, did the speakers address the topics relevant to your business? And then the third, to what extent does this presentation provide practical insights to apply your business? So I will let people take 60 seconds or so just to answer those questions. Just another 10 seconds or so, and then we'll look at the results. I can already see we're at the 70% mark of participants. Okay, so we didn't do too badly on the first question, Kat. How informative did they find the presentation? So we had 50% of the audience say very informative, and then 30% moderately, and 20 extremely informative. So we did okay on the first one, so that's all right. Happy with that result. The next one, did the speakers address relevant topics to your business? So again, much more of a spread on this one. 35% said yes, everything was relevant. 35 said mostly relevant. 25 some, and then we had a 5% with few relevant topics are covered. So again, I think that's the nature of the conversation today because of the breadth of different lines of business. Let's then look at the last one. To what extent did the presentation provide practical insights? Again, we've got useful mainly, so 70% said useful, 20 odd said extremely useful, and we had again a small insightful but not useful. So
I'll take it. We'll take it.
we'll take that. So again, I think at this point, what I'm going to say is, thank you for listening. I hope you found that informative. The results said that you did find it informative. These type of things, it starts off with a conversation, right? So both my LinkedIn and my email address is on the screen there. Same with Kat's LinkedIn, QR code, and email address. So connect with us, right? Have a chat. If there are things that we've talked about today that has resonated with you and the challenges you're facing in your business, your job, reach out, right? Because There is we see a lot. We see a lot of different variation come through because of the breadth of different types of insurers that we support at CGI. And we'd be more than happy to talk through and share some of our insights. We do something called Executive Insights Exchange. So you're more than happy to reach out to that. We're based in the walkie-talkie, more than happy to grab coffee at some point in London. So again, I encourage, if you have found this useful and you would like to have a further conversation with either myself or Kat, by all means, I'll leave the QR code up on screen. I think we are 1:55. Don't know if we've got time for questions or if we've got questions on chat. So I'm going to go to Tim now, our moderator. Tim, were there questions that we need to answer?
Yeah, just the one, Tim, and John's actually answered it. But if I can actually read it out to you as well,
Okay.
because I think for the recording it would be useful for people to hear. So it's just that, sorry, I missed the start of this webinar. Can you clarify if you guys are consultants or actual insurtech platform providers?
Okay. All right. Well, we did at the very start. So CGI is a solution integrator and consultancy. We are a very large organization that works across multiple different industries, come up to 100,000 people strong. So we are not an insurtech by any means or imagination. We do have a very open partner model where we work with quite a good number of insurtechs. Part of my role as CTO here at CGI for the insurance sector is to reach out and find those innovative technology solutions and insurtechs that are coming through and bring them back into our customers to help address their challenges that they've got. As a business, we're very focused on what are the right outcomes for our customers. We firmly believe that our success is in our customers' success. So in that sense, if we see the right insurtech out there, it's not unusual for us to introduce people. Sometimes we'll wrap the services because we do a lot on the cybersecurity side at CGI. We're well known in that space in the UK. Yeah, I think I've probably answered that question.
Thanks very much, Tim. And as you say, that's gone very quickly, just about up to the hour. So thanks so much once again to both Tim and Kat for your presentation today, which I'm sure everyone will agree has been interesting and valuable. You can reach out to the presenters, as Tim says, at the contact details shown on the screen at the moment, or feel free to contact me at tim.richards@mgaa.co.uk with any questions or for any introductions, and I'll be happy to pass these on. Thanks also for all of you for joining us, and don't forget to provide your feedback and look out for forthcoming MGAA events. And I hope you all have a productive afternoon as always. Thanks again for joining us, and see you all soon.